So if you're in a position where you need tax benefits to offset investment income, you should know about a huge tax break that was handed to real estate investors by the Tax Cuts and Jobs Act of 2017. Now, the window to take advantage of it closes at the end of this year, but it's not too late for investors to get huge tax breaks right now. And what I'm talking about is called 100% bonus depreciation. And this is a way that real estate investors and developers can accelerate huge passive losses on their properties in the first year of operation. And it's been an incredible benefit, but it expires at the end of 2022 and drops to 80% for 2023 and then 60% for 2024. The good news is that if you're an investor, you can still take advantage of 100% bonus depreciation right now by purchasing an income property that's put in service before the end of this year. So how about let me back up for a second and explain how bonus depreciation works, right? Now, many people are probably familiar with the standard depreciation allowance for a residential rental property. And this is one of the biggest advantages to investing in income properties. And what it is, the way it works, it's straight line depreciation. It allows the property owner to depreciate the improvements on their property, which is just the building, right, not the land, over the course of 27 and a half years. So, for example, if you bought a property for, say, $2 million and the land value was $500,000, the improvements on the property, which is the building, right, not the land, is worth $1.5 million. So if you divide that by 27 and a half years, you have a depreciation allowance of $54,000 per year. And this is a passive loss which can be used to offset any passive income such as investments or the rental income from the property, right? Now, most people are not aware that you also have the option to use what's called cost segregation accounting to depreciate certain components of the property faster. And a lot of professionals use this. So the way it works, you have a cost segregation study done by an engineering company that specializes in doing these, right? And they divide the value of your building components into 4 buckets. So first is land, which you can't depreciate. The second is structural elements, which are depreciated over 27 and a half years. But then there's personal property that depreciates over only 5 years, and land improvements that depreciate over 10 to 15 years. Now, using 100% bonus depreciation, you can take all the items that depreciate in 20 years or less and accelerate their depreciation. And then you can claim all of these passive losses in your very first year of operation. So the personal property and land improvement items that are going to qualify for this accelerated bonus depreciation are commonly about 30% of the building value. So in our example, with total improvements of $1.5 million, 30% of that would be $450,000 in passive losses that you can claim in year 1. Now, if you have substantial passive income from any investment source, this is going to give you huge tax savings. And whatever you can't use, you can roll it forward. Also, if you or your spouse qualifies as a real estate professional, which there's a few criteria for that, you can use it against any regular income. So there are some great opportunities to pick up qualifying properties right now. And these can be multifamily rentals or even a single family rental or a smaller rental property. The cost segregation itself can be done after the first of the year, but the property itself needs to be purchased and put in service, which means ready for occupancy, offered for rent. It doesn't have to be rented, but offered for rent before the end of this year. So the clock is ticking, but there are still some great opportunities available. So if you're interested in learning more about it, you can direct message me here or call me to learn more.